Hello guys, welcome back to the channel. If you're new to Mommy Trader, welcome around here. On this channel, I am just documenting my family's journey to financial independence. We share real numbers, we are about the investing life, and we plan on getting to the promised land. And I'm hoping that you guys are feeling inspired so that you can come along with us. And if you are a returning subscriber, thank you for coming back. I really do appreciate it. So on today's video, I wanted to talk about how to pick a stock, because I think when you are ready to invest, you're ready to kind of start building your portfolio, you're ready to start this path, it can be really daunting, it can be really confusing about where to start. What company do you pick? How do you go about finding these companies? How much of the company should you invest in? Should you go with an individual stock or an ETF? What about an index fund, mutual fund? And so I really wanted to keep this video really geared towards how to pick a stock and the process that my husband and I are using for our portfolios. And in this particular video, I'm going to show you at the second part of it our real portfolio and the real numbers, and show you guys how we are actually picking stocks for ourselves. Okay, so let's get into this video. So the first thing you want to do is figure out your foundation. And I'm always talking about having a basic foundational understanding of what investing is, and not just so much what a stock is, but more so your strategy towards this. You need to figure out what type of investor will you be, because there are different types of people who can tolerate different types of things. So you need to figure out what your risk tolerance is. Some people want a more conservative, safe risk tolerance. They want their portfolios to just kind of keep coasting along. They don't want them to go up too much. They don't want them to drop too much. They don't want them to kind of really be impacted by any downturns in the market. So they want to stay safe and conservative. Or you are more on the riskier side. You can tolerate, bigger risk, maybe in certain sectors in the market, and you feel like, what, I have the time, or I don't have a lot of time, so I'm willing to kind of put my money out there and see what it can do. And so it depends on what type of investor you're going to be in terms of risk. Also, figure out if you want to invest in index funds or ETFs and stocks. Now, if you don't know what stocks or index funds are or ETFs, I will link a video in the eye in the sky to my Investing 101 video where I really dig into those details. Next, you also want to consider how much time do you have to grow. Now, if you are in your early 20s, then you have a lot of time in the market to start investing early and often on a regular basis. But if you don't have a lot of time, so if you want to retire early, or let's say you are close to official retirement age, you need to consider that as well, because you may want to position your portfolio in terms of when you are actually going to need to use the money. And also, do not use money that you need right now. You don't want to invest with bill money. You don't want to invest if you don't have an emergency fund or savings account in place. You don't want to invest if you don't have a solid budget in place. Remember, when you put money into the market, you may not get what you put in back. The market may dip and you may lose some money. So remember, guys, do not invest with money that you need right now. Invest money that you can, do without. Next is figure out your goals. And I'm always talking about goals on this channel. Why are you investing? What is your why and what is your end game? I'll leave a video in the eye in the sky where I talk more about that in detail, but you need to figure out your goals. Take a piece of paper out and write down why are you investing, and then figure out what types of portfolios you want. So I can tell you that my husband and I have a dividend portfolio, we have a growth stock portfolio, we have a penny stock / specs portfolio, we have our retirement portfolio, we have a self-employment portfolio. Again, figure out what type of portfolio you want. You don't have to start with all of them at once, just one, and then you can just work your way up from there. And also figure out when you want to access this money. So remember, I just talked about giving your money time to grow, but you also need to figure out when you're going to access this money. And I know that in one of our portfolios, we're going to have to access this money sooner rather than later, because we want to retire early in 9 years. And so we are focused on building up that particular dividend portfolio so that we can withdraw from it in 9 years to help us, live, because we won't have a quote unquote 9 to 5. And also management. Some people like to manage their own portfolios. I'm one of those people. I love being in the trenches. I love seeing what our investments, what our money is doing for us on a day-to-day basis. I love learning about it and researching about it. And so that is something that, I don't mind doing. But other people, and this is perfectly okay, may want their portfolios to be professionally managed. They don't want to have to keep an eye on it. They just want to be able to put the money in and have someone else take care of it for them. And that's perfectly fine. And all of the major brokerages do that. So your Fidelities, your Vanguards, your Charles Schwabs, they all do that. So that's something that you can consider as well. Now, let's move on to the next slide. We want to talk about research and finding stocks because this is key here. You have to do your homework. And again, I know there's a lot of people out on social media just throwing stocks out there, but it's really, really important to, especially if you're a beginner at that, to really take the time and do your homework. I can tell you that I watch or listen to podcasts or different things while I'm folding up laundry, while I am doing my daughter's hair or doing my hair. Sometimes if I'm cleaning, put my earphones in and just listen. If I'm in the tub relaxing, bring up a book, do that. There are many, many opportunities in the day where you can, or even the week, where you can find the time to research companies. Start with companies you know. So if you have an Apple device, if you use Microsoft, if you go to Target or the Dollar Tree, those are great places to start with. And start with about what industries they're in, because there are different types of industries where I will show you in the second part of this video where I get into the account and show you that. But you also want to know about the management. Who's the CEO of this company? What are their track records? What is the earnings report? Because you want to get in the companies that are good, solid, and strong. You don't want to just put all your money in something that you don't know a lot about. Next is learn about what's new and upcoming. This is a great area that I am really loving right now, is finding industries that I can invest in early on. Because remember guys, before Tesla became what it is now, before Amazon became what it is now, they were startup companies. They were the little guy. They were in industries that was not well known at the time. And look how big they've grown. And so that is something that I'm really passionate about, especially in terms of a sector. And I'll give you guys a hint here. Marijuana, whether you morally believe in it or not, we're talking about investing, and investing is business. And so you want to look at the fact that, okay, we have a Democratic president. New Jersey just signed into law legalizing marijuana. That is a great sector to look into early on now before it kind of becomes widespread, and as a result it kind of runs away without us. But rather we are in now early on the train, so that when this train leaves the station, we are in our seats, locked, loaded, and ready to go. Also, start small and grow from there. You don't have to jump in head first. I do not even suggest that. If you are new to investing, start small, start slow. You don't have to do this kind of quick, fast, and in a hurry. You can build your portfolio with just one company or perhaps one index fund. I will link a video to the index fund video I just posted, which I believe was just before this one. So you can go back and take a look at that. I talk about 3 beginner index funds. And so again, you can start with just one company or one fund and then build up to 2 and then 5 and so on and so forth. Now, we want to talk about the different resources. Where can you go to find this information? So again, everything that I listed here is free. So Yahoo Finance is one of the great ones for beginners. It is so easy to follow. You can see all the information in one snapshot. You can also go to Seeking Alpha and Wall Street Journal. They have some really great articles about new and upcoming companies and sectors and industries that may be of interest to you. And same with Morningstar and Motley Fool. They have some great articles, some great forums there where it's not just their writers or contributors, but also day-to-day people talking in the comments about what they're looking at, what is on their radar, and you can kind of bounce ideas off of each other, which is so great. Also, Market Watch. You see I have Market Watch, but Market Watch is another great website as well. It talks about what's going on in terms of worldwide, global stocks, global finance, especially if you are considering maybe dabbling a little bit into index funds or stocks that are global, that are worldwide. Also, you can go to YouTube. YouTube is a great, fantastic resource to find what's coming up, what's new, stocks, and learning about things. Same as CNBC, Fox Business. There are several podcasts and audiobooks that you can listen to that are free. And so again, encourage you to just take advantage of all of these opportunities to kind of really understand how to buy a stock or an index fund or whatever you're trying to buy. There are tons and tons of resources. Even Instagram, there's a great finance community on Instagram, on Facebook, where you can go, even on Reddit in some places, where you can go and just be encouraged and ask questions. And even my channel, I'm really big on helping people grow their finances and become better at not just budgeting but investing, growing their net worth. And I have tons of videos on this channel that can help anyone who is new to the game. Okay, now we are going to talk about patience, because patience is very important, especially in the investing world. You don't want to kind of get FOMO, which is fear of missing out, meaning that you will just buy in at whatever price because you're afraid that it will run up. Or if the stock market is down, which it has been, and you just sell. You don't want to get into the habit of buying high and selling low. You're buying in at top dollar, and then because you get scared or fear, you sell out, and you lose money, and you don't want to do that. Again, patience is key. Remember, the market ebbs and flows. It will come back, okay? And over time, your portfolio, your money, if you're consistent and focused and continuing to put money in out of each paycheck or once a month or whatever schedule you are on, you will see your portfolio increase. And also, guys, and this is important, I know this is going to be really hard because sometimes it's a challenge for me. Keep emotion out of it. Again, this is business, and I know it can be a little challenging because it's your hard-earned money and you're tied to it. But again, guys, treat it as a business. Make your money work for you. And sometimes it hurts, or you feel sad because you see red all over the place. But remember, guys, especially if you don't need the money right now, give it time, okay? Your money will grow for you. Otherwise, there wouldn't be billions and billions of people putting money in the stock market if it didn't yield anything, okay? You wouldn't have Warren Buffett, who's like a zillionaire, continuing to do this and continuing to get rich if the stock market was a fluke, okay? So remember that, guys. Next, we want to talk about our specific portfolio. So the one I'm going to show you today, real numbers right after this slide, is our dividend portfolio. How do we pick our dividend stocks? Okay, I'm going to talk about that in that video. But first, what is a dividend? A dividend is, simply put, a payout a company gives to its shareholders. So if you buy the stock, you are a shareholder, okay? Even if it's a quarter of a share, a half a share, a whole share, you are a shareholder, you get a payout. Next is, the reason that we are building this dividend portfolio is to use for early retirement. Remember, when you retire early or before 59 and a half or 65 or whatever the number is now, that you can't use your 401k unless you get taxed or penalized, and we don't want to do that. So we have to have money that we can live on if we're 45. So our dividend portfolio is one of the ways that we plan on doing that. And so that is why I'm going to talk to you about this particular dividend portfolio and how we pick out stocks for this portfolio. Also, our risk tolerance is medium. That means we invest in safe companies like your CocaColas and your Fords, but we're also investing in upcoming sectors like marijuana, because that's really, I think, on our radar and probably on a couple of other people's radars right now. And also, how do I pick these stocks and where I do our research? Yahoo Finance. You're going to see me pull up Yahoo Finance, so stay tuned later in this video. I do like to look at Seeking Alpha. I actually really love Seeking Alpha. Tons and tons of YouTube videos, and I love me some CNBC. So with that said, we are going to switch the screen, bring up our portfolio account and Yahoo Finance, and get into some deets. All right, guys, we are here on our Robinhood account. And so as you can see, the account is down just a little bit today. We're only down about $40, which isn't too bad considering the market has been really crazy these past couple days. But I wanted to go through 3 stocks, and I'm going to pull up Yahoo Finance as well so you can see how I research a stock and decide whether I'm going to invest in it or not. Now, this is our dividend portfolio. So this is what we're using to build up our dividends so that we can withdraw from this at our early retirement age, which I'm 36. So we're thinking about at when I turn 45. And so again, guys, this is just the plan for this particular portfolio. Remember, I talked about having a specific goal for your account so you know what you want to do with it. What's the end game here? And so I'm going to pull up 3 stocks. I'm going to do Coke, I'm going to do AT&T, and I'm going to do BP. So let's pull up Coke here. We can actually just click it right here. You see the ticker symbol KO. Let's click on that and pull it up. And as you can see right now, Coke is at $50.68. This is a company that I am very, very bullish, and bullish is just a stock term. That means I'm a believer that the stock will go up, that the company is going to continue to thrive and continue to produce good financials and good earnings reports and so on and so forth. Now, there's another term that means if you're bearish. Bearish just means you think the company is going to do the opposite, that they are going to have less than stellar earnings reports, that management is kind of rocky, they don't have a good clientele base anymore. But Coca-Cola has been around for a long time, and they are actually considered a dividend aristocrat. Dividend aristocrats, and you can go and type it into Google, are basically companies that have been paying out dividends consistently for at least 25 years. And so any company that is on that list is one of the OGs. These are stable, strong companies that aren't going anywhere. So that's a great base to start at too, if you're looking at what type of stocks to get in. But I really, really love Coke. I think it's not a bad price at $50.67. You can see we have a little over 10 shares in this, and you can see that we're only up a little bit. But again, this stock does not go straight up or straight down. If you look at it, it kind of goes up slowly. Let's pull it out some. You can see there was a dip here. There was a big dip here last year. As you can see, March 23rd, 2020, where I think all of the stocks mostly in the market and around the world kind of fell, to the gutter because of the pandemic. But again, it's just slowly coming back. And one of the main reasons why Coca-Cola is great is because of the dividend that it pays. So the dividend yield is 3.24%. And again, everybody know about Coke. They have so many products. They're in movie theaters, amusement parks. They're just everywhere, and they're all over the world. When we were in Romania, when we went to London, my husband went away on business and we went with him one year. Coke all over the place. Coke in restaurants. And so again, this is a really good company that we are very bullish on. And if I go to Yahoo Finance, which I'm a big fan of, very, very beginner friendly. We're going to pull the company up, and as you can see, it just gives you some information about the company. But here's where I want you to go, especially if you're beginners. Go to profile, click on profile, and this just gives you the basic summary of what this company is, where it's located, the headquarters. It gives you what sector and industry it's in, because that's very important, especially if you want a diversified portfolio. You don't want to have all your positions in tech. You don't want to have all your positions in financials. You don't want to have all your positions in automotive. So it's really good to have a balanced portfolio, especially if you are new to this. But again, I love the sector. It's in consumer defensive, which basically means that Coke is one of those companies that if the market goes down, it can still stay afloat because it produces things that people consume. So people will have a hard time giving up their Diet Cokes or their orange juices or their waters or things like that. And so that's a really safe company to have in your portfolio when you're talking about, building up your positions. And again, you can see who the executives are in the company and just a basic description of what the company is. So let's go back. We're going to go back to our main page, and the next company is AT&T, I believe I said. Please forgive me if I didn't say that. Okay, AT&T, we have a little over 20 shares in this. As you can see, AT&T is another one of those companies that does not just kind of go all the way up or go all the way down. It's very safe. It's very stable. It kind of trades up very slowly, which is what you want when you are talking about safe dividend stocks. And again, we can see that AT&T pays out an outstanding dividend. The dividend yield is 7.009. And so again, I would like to get this AT&T position up to 100 shares, and we're just slowly building this up. Now let's go on over to Yahoo Finance. You just click T, and if you don't know the symbol or the ticker, just type in AT&T and it'll come up right there. Okay, click on it, let it come up. All right, and again, this is just, all of this that you see really is just going into the fundamentals and technicals of a company. And again, that's really good to do fundamental analysis, which basically is just talking about who were the management, what are the earnings reports looking like, the products, things like that. Technical analysis is really looking at numbers, is looking at the graphs, is looking at the charts, is seeing how the stock is trending, how it's trading, volume, what's the market cap, things like that. But as you continue to study and go on and investing and learning about stocks and things like that, you will get to know this information, okay? But this is definitely more on the intermediate level, which is why I don't talk about it too much, because if you're not trading stocks, which is just basically buying and selling in a short amount of time, then you can just bypass all of this and go on over to profile, and that'll give you a really basic understanding of what the company is, the sectors, the industries, the management, and what the company does, okay? So as you can see, AT&T is in communication services. They're like Verizon, Comcast, and the industry is telecom services. I'm very bullish on AT&T as well. As I mentioned, I want to get our position up to 100 shares of AT&T. We currently have a little over 20, so we're just continuing to chug along. But again, I really do enjoy Yahoo Finance. You can click on the financials and you can see the total revenue that they have, the gross profit, how they're doing, and their margins. You want to make sure that the companies you are investing in have good balance sheets. Look at that. You can click on balance sheet and it'll tell you what the balance for the company is, and you can just spend some time just going through this and taking your time and just looking at it. And the last company was BP that I mentioned. I'm gonna just type it here, bring it up. I don't want this video to get like too long. As you guys can see, we have about 15 shares in this. We actually are doing pretty good in BP. Our average price is $21.21. We're up about 20%. BP is another great company as well. This is based in the United Kingdom. Great company. Let's type it in, BP. Let it pull up. All right, so BP is currently at $25.27. Let's go to the profile. And as you can see, it's based in, this is a great global stock because it's based in the UK. It's in a great sector, energy, and the industry is oil and gas. Again, I really do like the management in this company. Really solid, stable people who know what they're doing and are really like geniuses at this, which I really love. Again, you can also see some of the description down this, but basically BP is just an oil and gas company. You probably see the gas stations around, you probably use them. And again, I always talk about, you can always start with some of the companies and services and products that you currently have in your house. You probably have P&G, you probably have Colgate, you probably have Kellogg's. I mean, these are great companies to start with, and those are all three of those companies I just mentioned are considered dividend aristocrats. Those are companies that pay out dividends for 25 years. They have been around, and those are really solid companies. And I love that you can click on summary and it'll give you a quick summary again of the company and how they're doing, their numbers and the volume and any news that comes up with the company or the sector, which is really great. You can go down and click some things that may be of interest to you so you can get some kind of knowledge and more information, understanding of the sector, not just the particular stock or even index fund, but the sector, so that you can be aware of what's going on. You don't want to just invest and kind of grab things out of the air. You want to have a plan. You want to know what you're doing. You want to have a goal to this. So that's pretty much the video, guys. As you can see, we have some other dividend stocks here, and so this is a really good one. I'm actually going to buy some more of this. This is a marijuana ETF. This is a sector that I am going to go heavy into. So when I have my next investing video in this Robinhood account, you guys are going to probably see me put a lot of money in this sector, not just in this ETF, because again, I do feel like marijuana is like a sleeping giant right now, especially as more and more companies are legalizing it. And so that's pretty much the video, guys. I hope this really helped you in learning how to find a stock, where to go. And if you have any questions, please leave them down below. I'll get back to you. Like the video if you haven't. Don't forget to subscribe to the channel, share with a friend. Until next time, I'll see you later. Bye, guys.